Mohnish Pabrai manages over $900 million invested in 10 stocks in his portfolio at Pabrai Funds. In this video, we're covering all 7 of his biggest publicly disclosed holdings worth $511 million. Plus, we'll cover a bonus stock that isn't officially listed in his portfolio, but we know he owns. The first stock on our list is Sunteck Realty. Sunteck is a Mumbai-based real estate company that designs, develops, and manages ultra-luxury and luxury residential and commercial properties. The company went public before the global financial crisis, and since then, it's up more than 300 times. Pabrai likely bought into the company in the mid-2010s. Since then, he's likely up 5 to 6 times on his initial investment. Sunteck is listed on the Bombay Stock Exchange in India, but it's worth $1 billion. Today, the company is trading 4 times higher than where it bottomed out following the market crash back in 2020. Sunteck makes up 2.9% of Pabrai's portfolio, and we know from his most recent shareholder report that he's trimmed the company by 2/3 in the last year. That's pretty good timing considering a fair value for Sunteck is around 420 Indian rupees per share. That's 180 rupees below its current stock price, which means Sunteck looks like it's overvalued. We'll see if Pabrai continues to sell his holding. Mohnish Pabrai is a highly regarded value investor who became personal friends with Charlie Munger after he bid for and won a charity auction for lunch with Warren Buffett alongside fellow value investor Guy Spier. Pabrai's portfolio is extremely concentrated and usually hidden. In fact, we can only see 4 of his holdings in the United States. Many people online think these are his only investments, but they're wrong. Pabrai has at least 4 other international holdings that are more secretive for US investors, although he's talked about them publicly in his interviews. You just have to dig. Pabrai's next stock is the first that shows up in his US listed holdings. It's Arch Resources. Arch Resources is part of Pabrai's broader basket bet on the coal industry.
And here we are, heavily loaded on coal because of that tweet.
Mainly he's focused on metallurgical coal, which is used in the manufacturing of steel. Arch and 2 other companies in the portfolio primarily focus on this type of coal, and there's only one thermal coal or coal used for energy later on in the video. From Arch's pandemic lows, the company is up more than 7 times. Arch Resources today is a $2.8 billion market cap company that trades $35 below its 52-week high. With increased cash flows since the pandemic, Arch has returned most of its capital to shareholders through the form of share buybacks. Right now, they have a shareholder yield of 5.84%, and this was even higher when Pabrai first bought the company. Pabrai's been trimming Arch Resources in the most recent quarter, selling 40% of his stake. Today, it makes up just over 10% of his US-listed portfolio. When we look at things overall, this is more like 4.4%, or even lower. While Pabrai has been selling, analysts are still targeting a price of $165, saying there's a slight upside from today's stock price. Warrior Met Coal is the next stock on our list, and it's also part of this coal basket bet. From its lows in 2020, the company is up 6 times. This is his most recent addition to his bet on coal. It's worth noting he bought first in the 4th quarter of 2023 and then turned around and sold this right away in the 1st quarter of 2024. Still, it makes up 13% of his US listed portfolio. Today, Warrior Met Coal is a $3.5 billion company that trades pretty close to the price Pabrai was likely buying at. It's just $10 below its 52-week high. Different from the other coal stocks on our list, Warrior Met has not been returning a lot of cash to shareholders. In fact, they've actually diluted shareholders in their last 12 months, and they have a negative shareholder yield overall. Warrior Met Coal's fair value, which we can see here using this tool, is just below $80 per share. The 4th stock on our list is Consol Energy. It's the 3rd coal company in a row, but this one is different. Consol Energy is primarily a thermal coal producer. They produce a very high-quality, energy-dense form of coal that's burned in coal-fired power plants to produce electricity. The company nearly went bankrupt at the end of 2020, and since then it's up more than 25 times for shareholders. Today, Consol Energy is a $2.9 billion market cap. It trades $16 below its 52-week high. This is different from the other coal companies we've looked at, and Pabrai talks about that in his latest interview.
Last year, I had made an investment in a company called Consol Energy. It's a thermal coal producer.
Consol Energy is also a leading position in David Einhorn's portfolio, and Pabrai originally copied the idea from him.
David Einhorn's Consol Energy bet looks like Mohnish's IPSCO bet. And IPSCO was a company I had invested in almost 20 years ago, 2004. And I have very fond memories of IPSCO. And Consol was very similar in the sense that they forward sell a year in advance all the coal that they're going to produce with price bands that are fixed. In 2023, they've already done all these deals where that money is going to show up in 24. And so I said, okay, this is actually better than IPSCO because you know a year in advance and you can't really lose money. The second thing that they had going with IPSCO didn't have, they were going to spend all their money buying back shares. So if you're trading at 3 times, 4 times, 5 times cash flows, and someone's going to buy back all the shares.
In that clip, Pabrai talked about the capital allocation from Consol. Its managers have chosen to buy back nearly 15% of their shares in the last year alone. With partly contracted revenues and cheap multiples, this can generate a ton of value for shareholders.
I would love for the Consol price to stay extremely low for a very long period of time. In fact, it's not good if it goes up. They would buy shares back at high prices. In general, if you have identified a business which is undervalued and no one agrees with you and it remains undervalued, at the end of the day, that business is producing cash flows. And you have a claim on those cash flows. And if the business is prudent about how it's either using or distributing those cash flows have to show up as dividends or value to the investor. So
Pabrai slightly trimmed Consol in the first quarter of 2024, although it still makes up 14.2% of his US listed portfolio. From where he initially bought in, he's likely made 50% returns on his money in just 1 year. Overall, Consol is around a 6% position in his total portfolio. Today, a fair value for Consol Energy looks to be around $115 per share. Pabrai's third biggest holding is Edelweiss Financial Services. This one was disclosed through a shareholder letter. Edelweiss is a $750 million investment banker headquartered in India. The company has seen its peaks and valleys as a publicly traded business. It still trades 2/3 below its all-time highs hit back in 2018. However, as we came out of the pandemic, the company lagged the overall market in India, at least until recently. Since the beginning of 2023, their stock price has more than doubled. With their recent run-up, Pabrai has trimmed around 1/3 of his shares. Today, Edelweiss is a 7.2% position for Mohnish. While it's listed in India, Edelweiss looks like it has a fair value somewhere around 70 rupees per share. This means with their stock price appreciation, today Pabrai is again probably warranted in selling the business. Pabrai's second biggest stock is his biggest holding in the US, and it's the only company we know he was buying more of in the first quarter of 2024. At 62% of his US portfolio and 26% of his portfolio overall, we have Alpha Metallurgical Resources. AMR is a company that's come back from the brink. Today it has a $3.8 billion market cap and it trades $150 below its 52-week high, which it hit at the beginning of 2024. So why that qualifier? Well, since its lows during the pandemic, the stock is up 140 times. To its all-time high, it was up 220 times. That's insane. That's one of the fastest 100-bagger performances ever. Pabrai first bought into these coal companies in the middle of 2023, and briefly at the start of 2024, he had already doubled his money in them. Still, instead of selling, he actually added more. Overall, Pabrai is up big on his AMR position, but he's likely still down from his most recent purchases. Capital allocation is huge for AMR, and again, like Consol, it's buying back a ton of its shares. With buybacks and dividends, they have a shareholder yield north of 17%. Outside of AMR and Consol, there's not many stocks like this. Fundamentally, based on the numbers, it looks like a fair value for AMR is around $315 per share. That's above today's current stock price, which is likely why Pabrai was still buying, although it is way down from where they traded at the beginning of 2024. Pabrai loves his biggest holding, and he's been talking about it for nearly 2 years. If you follow him, this shouldn't be a surprise. Reysas Logistics is Pabrai's large bet in Turkey. He invested when they had a market cap of only $20 million. Today, their market cap is around $840 million.
And I remember we were driving to a business he was taking me to, where he said, Mohnish, the market cap is $20 million and the liquidation value is like $800 million. So I said, fraud hai kya? In English, I told Haider, is this a fraud? He said, no, I have an investment in it, as far as I can tell. So basically, he said, there's no fraud. And he said, it's really simple. They have 12 million square feet of warehouses. They're 99% leased. You can very easily get a value on those. It's about $80 a square foot on average. So you have about $1 billion value of these warehouses, and there's 200 million of debt. And there's 800 million. And these are all leased to Amazon, IKEA, Carrefour, 99% leased, inflation index leases or dollar leases. And there's nothing there. So I went, and the father and son that run the business, I met them. I liked them. I thought they were really smart business people. And then I spent the afternoon visiting the warehouses, and they looked great. And I really couldn't find anything wrong with the company. I started buying the shares, and I was surprised. For $7 million, I got 1/3 of the company, 3%. And the second thing, what I noticed about this father-son that run this business is that they didn't just have the warehouse business. They also have the largest freight train network in Turkey. So in Turkey, the rail cars are private, and you can run freight business and so on. They have the largest truck fleet in Turkey. They have 2,000 trucks. They have a huge forklift rental business. They have a vehicle inspection business. Every car has to go through inspections every 2 years. And that's like you get sanctioned by the government and so on. So they're like 4 or 5 businesses. Each one has very favorable economics. And each one is a high quality business. And so their model is that if they don't get their money back in 2 to 3 years in dollars, they have no interest in investing. So I found that unlike a lot of entrepreneurs and business managers, the father never went to college, but he just understands that if I put $1 out, he wants to know, ye dollar kitni der mein meko wapas aa raha hai. And if it's not coming back in 3 years, he's not interested. So he doesn't understand IRR. He doesnn't understand return on equity. He doesn't understand any of those terms. He just understands this particular fact, which your grandfather understood.
Yeah.
He just understood the fact that I put money out and what comes back, and that's what matters.
From his initial investment in Turkish lira, he's up more than 40 times. Pabrai has been adamant that this will be his first 100 bagger in the Pabrai Funds. Reysas is the largest warehouse operator in Turkey, and it makes up to a staggering 48% of his portfolio. He loves this company for 3 reasons. It has great assets in prime locations in Turkey. It also has great management run by a father and son duo of the people who founded the company. Thirdly, they have inflation index contracts which give them recurring revenue with large blue chip customers like Amazon internationally. And as a bonus, most of their expenses are in Turkish lira, but their revenues are coming in euros and US dollars. That gives a huge edge in inflation rampant Turkey.
So when we invested in 2019, the company was worth about 700-800 million. At least it was probably worth more, but that's the amount I could figure out. I think the value now maybe about $1.5 billion. It could be more. And the stock that was a 20 million market cap is now like 350-400 million. So it's moved, this is in dollars. The lira has collapsed in the meanwhile. Right. And even with the collapse of lira in dollars, we're up a lot. But even at the 350-400 million, it's very undervalued. And the thing is that abhi wo kehte hain na hing lage na phatkari rang chauka. So basically, what do I have to do?
Yeah.
I have to be in Austin just reading whatever I want to read. Okay. Do I have control? No. Do I care about control? No. Do I want to be on the board? No. All those things mean I have to do work. My job is to just cheer them on. I go meet them once a year. I talk to them every few months. And they are very smart about how they invest. I've never seen them make a mistake. They're very creative. What I was telling you guys about the creativity, they have extreme creativity of entering new businesses, but they make it extremely tiny bets. So they'll see some opportunity. They'll actually go in where they don't have competence, put $500,000, $1 million, whatever, and they see what happens. If it works, then they just press on the accelerator and they go. And if it doesn't work, they back off and then try something else. So basically, Abhi, with this business, if it went to $1 billion market cap today, we're not selling. If it's gone to 5 billion, we're not selling. Because basically, if someone is reinvesting capital 25-35% return, and this father-son duo pretty smart about doing it. I need to leave them alone for 20 years. So what difference does it make whether I'm the founder of the business or the manager of the business or a passive investor? The best position is a passive investor. कुछ काम करने की जरूरत नहीं, right? And your grandfather worked very hard. Your uncles worked very hard. Everyone worked very hard. I just not that hard working, you know. So I think that there are, because of the auction-driven nature of markets, something like this Resas in Turkey will show up once in a lifetime. But you only need one. You don't need 10. But there are plenty of them that show up, which will give you a 10x, give you a 20x. Resas might give us 300-400. Eventually, by the time we're done, it might be several hundred times the return. And all we got to do is be a cheerleader, nothing else. And life is good.
In interviews where he estimates the intrinsic value for Resas, Pabrai has told us he thinks it's north of $2 billion. When we convert that back for their Turkish listing, that's more than 122 Turkish lira per share. This is rougher for Resas, but it still looks like the company is significantly below their fair intrinsic value. Now, I promised to cover a bonus stock that doesn't show up in Pabrai's portfolio, but which we know he owns. This company is India Energy Exchange. It's an Indian company trading on the Mumbai Stock Exchange for nearly $2 billion. Pabrai invested in the company alongside Guy Spier before the pandemic, and since then, it's up more than 4 times. Indian Energy Exchange offers an electronic platform for the trading of energy products in India. They have 3 segments, which are power exchange, carbon exchange, and a newly opened gas exchange. As we look at their numbers, all 3 of these are super high profit margin businesses. The company also sits on a boatload of cash, but it does trade for some lofty valuation multiples. From where Pabrai first bought in, the company was up nearly 6 times at its peaks back in 2020. Since then, it's down, but it has recovered in their last 12 months. Pabrai generally tells us that his positions are around 10% of the portfolio. If we assume that's true with Indian Energy Exchange, then it very well may be the rest of his stock portfolio internationally. When we use the fair value tools for the company, it comes in at 142 rupees per share. Indian Energy Exchange may trade above its fair value, but Pabrai has publicly said that this is a very high quality company and there are few equivalents throughout the rest of the world. Similar companies have easily offered multi-bagger returns throughout their history. That's probably why both him and Guy Spier are strongly holding onto the stock. You can follow Pabrai's portfolio and use the same tools we've used throughout the video by signing up in the description. You'll get exclusive bonus coverage of more than 95 stocks and counting.